Hi, thanks for tuning in. This is a weekend review for the week ending November 3rd, 2023. We've got October close in the book. We are on to month 2 in the final quarter of the year. Looks like we've got momentum reverting to mean. A little mean reversion on the weekly time frame as indicated here by the momentum indicator PPO, within the context of an uptrend on the monthly, as represented here by a positive histogram, but also just the blue line crossing above the red. Looking at the slope of the 50, it's quite obvious that this trend is up. Okay, so there's that top-down view from a technical analysis standpoint. The momentum on the monthly is pointed up, while the weekly momentum has reverted to the zero line. Structurally here, we revisited this key level here at 410 and this level at 418. So at this point, I don't really know how you could draw this thing. All right, there's your ABC correction, back to wave 1 high, right? Doesn't really matter from a subjective standpoint. We've got a level here that was providing supply, could not break above 410. She finally broke above it and came back to it within the context of a monthly and quarterly uptrend. She's broken the quarterly higher low, so she could theoretically fall all the way back to 348.11 in search of a higher quarterly low. At this point, the quarterly 5 and 10 are holding. There's no reason to think they won't, especially given how breadth has improved and you are seeing the transports and small caps lead the market higher. Zooming into the daily, she's recaptured the 50. Doesn't really matter so much if there's a divergence here or not. What I'd like to point out is we have lower highs in momentum and that pattern has not broken. Okay. Got a gap up here that just filled. They sold it. This gap here. Another gap all the way up here at 450. But this is obviously a downtrend now. The ascending channel that was here broke. Okay. That's why I'm more in line with this idea that the much larger move that took place here, that move is what's corrected. And if you look here, you pretty much have a 50% retrace. We don't. We could, again, still fall back to 404 all the way down here by December 4th and put in that 50% retrace. Certainly has the 50% retrace of this move. So it's entirely possible. This is your 1, this is your 2, here's your 3, here's your 4. And we're going for 5. But if that were the case, we've got a lot of overlap here. So we'll keep the subjectivity aside and move right along. As we look at the SPY and equity chart, I'd like to tell you why we're looking at the SPY and equity charts. I'm going to go look at the intermarket analysis, the pair trades. This is SPY versus TLT. What you have here is a continuation of trend that's been going back to 2020, where bonds put in a secular high. Since then, there has been no evidence to suggest that we should favor bonds over equities. Rates going higher and higher are also confirming that. If you come over here and look at SPY versus the dollar, this, you could argue, is your inverse head and shoulders pattern. And here was our throwback to the neckline. You could also argue this is a series of higher lows and higher highs. The 50 did just cross above the 200, and now we've recaptured all of the moving averages while momentum reset to the zero line, which is what you look for in mean reversion. Equities versus commodities. Another higher low. We'll see. Now, price here is below the 200, right? Where in all these other instances, equities are above the 200. So this is of interest. If the bulls can't get going, if the equity bulls can't get going, it's possible that this thing is going to go all the way back down to June. in which case oil and gold will outperform equities. We don't have that yet. We have a bear trap here where they went below and recaptured. SPY versus gold. Very, very similar setup here. Higher lows the whole time. The 50 above the 200. This is a bull market look. Again, reverted to mean. This is suggesting that you could own both equities and gold because there have been many periods of time in the past 2 years where gold has outperformed equities and equities have outperformed gold. Diversity into gold as a flight to safety and cash as a flight to safety has worked pretty well. Much better than flight to safety into bonds, which has not worked well at all. Zooming into IYT versus IWM, here you've got transports over small caps really since October of last year. QQQ over IWM, same thing since the lows. It has made sense to favor QQQ over IWM. However, this looks like a 5-wave move that could have just completed. We'll have to see. Some mean reversion back to the 0 line and back to a rising 50 could be in play, in which for the end of year, seasonality-wise, it would make sense that December into January, middle of January, would be strong for small caps. IYT over QQQ, simply not seeing it. This is a strong downtrend. Again, you've got a divergent low here. You could see some mean reversion into the strong seasonality here for equities into the end of the year. We'll have to see if they can start to lead. But again, this is a downtrend. QQQ over transports. That has absolutely paid. SMH over SPY since the October lows. Again, this looks like a topping pattern to me. I could be wrong. It could just be a bull flag, and we're going to march higher here. But she can't get above 70 RSI. And if you look over here, like take a look at this one, QQQ versus IWM, like above overbought, right? Remains overbought. We're not really seeing that here. Can't get overbought at all. So a bit strange for the semis. However, no fear yet. Semis outperforming IYT. So again, as you can see, equities are the place to be. If you'd like to diversify into gold, that makes sense. But outside of that, really nothing to do there. We're going to throw the ball around the horn real quick and take a look at IWM. We do have a nice weekly reversal candlestick on time. We do have a recapture of EMA 5. Look for dips into 171 this week to come into play. But you do have this third low, 1, 2, 3, just like here, 1, 2, 3, and on the third one they flip the script. I'm not saying that's what's going to happen here, but it certainly wouldn't surprise me to see at minimum a 50% retrace of this entire move back to 203. Even if this is something, again, subjectively, that could certainly fit the rules, in which case we'd be rallying back to 209 right now in a corrective pattern. Okay, again, aligns with this, bullish seasonality into January. Zooming into the daily, again, below the 50, below the 200, bear cross, death cross, not what you want to see. That being said, this type of rally on volume is what you would want to see for a reversal, and that's exactly what we have, a reversal on volume. And if you throw the ball around the horn to IYT, you have exactly the same thing. So again, assuming that this is just one big 5-wave move lower and we're going to retrace 50%, you'd look for a rally to stall somewhere between 238 and 245. At this point in time, I believe you have to play the long side against all of the lows from last week and the end of October. Zooming into the daily, we have what looks like a breakout, okay? Captured the 20, bull cross, histogram thrown the buy, and this all happened the day of the death cross, okay? These it's not like you can just do the opposite of what these things are. It's probability. Okay? And there's something called when what happens doesn't happen, i.e., a bad beat, right? I had all the odds in my favor, but I still lost. That's this right here. So if you were a bear, you were expecting this to break down here. And you look at the weekly, you close below the 200, but look at the configuration of the 200. The 50's above the 200, and all the other short-term moving averages are right around there. The 20's above the 50, the 50's above the 200. That's a bull configuration, despite the fact that price went below. She instantly recaptured that pivotable 200 weekly moving average, allowing mean to revert all the way back here to the zero line. Okay, what I start to see here is left shoulder, a head, and a right shoulder. So if she can rally out of here in a V-shape type of bottom, then this thing could be signaling a longer term bottom. And what do I mean by that? Well, if you zoom out to the monthly here, nothing has happened on this particular chart. I mean nothing. And pretty much at this point, talking 5 years, 6 years, prices moved 5% in 6 years. That is not a lot, okay? And if this thing is about to do something like this, which I still think is entirely possible, all right, then she could be coming all the way back to right here, which is December 14 of appreciation of about 10% in 10 years, okay? In order for that to happen, she's going to have to get through the 50. We do not have that. Again, close below the 50, instantly recaptured. So you're getting this bear trap look on the transports, which is required for a bull thesis, a rotation thesis to take place. Because if we look at the Qs, and we just zoom out to the monthly, and we go back to that same period of 2018. Remember, 6 years, and she appreciated 5%. QQQ's up 100% in that same time frame. Right? So the move higher in QQQ is not being supported by the move higher in IWM and the move higher in transports. Here's 5 years ago for IWM. It's red and flat. Right? So there's nothing here that supports a bull market thesis. Right? Except the fact that they're now rallying. So this is all within the context of an oversold state, sure. Then this thing should stall out at 180. And the same thing with IYT. When you start to look at these gaps and you start to analyze what's going on here, this is a very rapid rate of change. In fact, what is this? This is a V-shaped bottom. And again, this is right out of the principles taught by Hurst in cycle theory. Right? You look for V-shaped bottoms because the market bottoms in tandem and it tops at different times. So we know this to be true, and you're seeing it right now. Okay, you're getting this V-shaped type of rally, which is a requirement. Throw the ball around XLF, which is 10% of IWM. Is this ABC DE triangle? Is this complete? It sure looks like it. I mean, this type of rally here that you're seeing, you have not seen since the COVID lows. I mean, the range here is up 7% in 1 week. I mean, very, very, very rare. And we're just going to have to see. I mean, you have it here in 1 week. You might have it here. Again, but you don't have it on volume here. You have increasing bull volume here. So at exactly where I believe you should see this rally take place. And if you want to talk about dead money, I mean, this thing has not moved in 12 years. This is 2007. Up 9% in 16 years. So if XLF breaks out of this triangle and starts heading back towards all-time highs, that will be the fuel for IWM to rally. And if you look at this thing, we've kind of hit all of these downtrends. Now we're back within this one here, okay? So if this thing's done, she's going to die here at a declining 10 and she will not capture this. Okay, and if that happens, I think you're going to see across the board a liquidation. And where to? Going to see that come all the way down here in some symmetrical move like this. All right, not saying this is off the table. It certainly could be on the table. But it's going to start with XLF, and it's going to start with IWM, and it's going to start with IYT. And all three of those right now are telling me that the bears just got trapped. Okay? This is a vertical move. This is 12 bars straight down, 21%. Okay? That is a massive move. And on the last bar, you have what looks like capitulation. You have a gap up and close above the previous candle high. This to me is very bullish. Okay, so when I look at equities, I'm seeing a very, very bullish thesis. When I look at things like bonds, we're starting to see a bottom. We're seeing funds flow into the bond market. But again, the intermarket analysis is not suggesting that bonds are where you should be. If you start looking at dollar, is this the lower high on the monthly? It certainly could be. Broke the monthly higher low pattern and is pulling back to the 5. Things get really ugly below 29.40. If that's lost, you're gonna come right back down to 28.80 in a heartbeat. But again, this is a pullback to the 50. Could certainly be an expanded flat. So not enough information yet. However, this is an ugly candle. All right, this is an outside reversal candle. And you look at gold, gold's marching right back up. This looks extremely healthy, supporting the thesis of, you know, having some gold in your investment portfolio. Again, I'm not sure what's going to happen here. This could go either way. It really could. Zooming out to the quarterly, you can see, is this a series of highs on less and less momentum? It certainly could be. Or is this a large cup and handle? I just don't know yet. I don't really have to have a bias. If GLD can get above 193, 194, and certainly 200, then it won't really matter if you buy at 200 because she's going to 600. So we just need to see how this one plays out. All right, let's take a look at Bitcoin real quick because she's off to a really good start to Q3. I'm sorry, to Q4. Looking here, we have what could very well be the ABC that was needed to reset this impulse move. And now we're looking for another 5-wave move higher, which is essentially what we're in, targeting around 49, 50K. I don't expect Bitcoin to get much higher than that. Again, when we get there, we'll see what that looks like in real time. Okay, it's always possible that she could come up here and hit 90K by January. I'm not discounting anything at this point. What I will say is closing above 31,000 is bullish. Pulling back to this level would be very, very normal and would be a great risk reward setup for a new bull who is not currently in the trade. That being said, let's take a look at some of the momentum indicators that fired up this week. We've got Riot, DraftKings, ARK, TLT, bonds, right? XLF, IWM, SMH, QQQ, SPY, and KWeb. So essentially every ETF on the equity side that I watch fired up. And a lot of the names within them are acting and showing leadership again. For example, let's take a look at ARK. ARK is trying to put in this inverse head and shoulders bottoming pattern. that I've been calling out for quite a long time now. If you look at the monthly, very clear left shoulder, head, right shoulder setup. Momentum has flipped up. Histogram or rate of change has showed improvement, flipped positive, which is historically just a much better configuration to be in than when it's negative. You can backtest this. Don't take my word for it. Go do the research yourself. At a declining 20 and 10 and 5 are flat. Very, very important level. But the point is if she rallies up from here and gets above 50, this time she's not stopping. Okay, until about 80 or 90. So this is what will usher in a very, very much needed change in leadership. And then you have opportunities for the leaders within ARK, like DraftKings, which could be breaking out of a much longer downtrend, as you can see here. Again, this leadership change from anything, Facebook, Amazon, Netflix, Google related to anyone new, I think is exactly what the market needs. The market can't just continue to be 7 stocks. All right, that's me off the soapbox. Riot also flipped up, as you can tell, at a very, very pivotal point in this chart as well. Flipped to the weekly. Okay, is this finally time? All right, did we get this wave? 5-wave move up, ABC down, right back to wave 1, and now we can leave the station, or at least do another 5-wave move up, puts it at 50. I mean, that is entirely possible. Again, you've got to get above 14 to get that really moving. Have to get above 14 and ultimately 20. But at this point, it's showing the structure that you'd need to see. If wrong on the time, right? Maybe it's doing something like this before another move lower. Could still pull all the way back, right, to this, I would say this general confluence right here. The blue line and the red line, which have been demand, as you can tell. So Riot flipped up this week. Watch for the 200 to hold. Watch for this yellow line to play to act as demand. If you look at the Bollinger Bands, again, above the top of the band, which is a breakout. This is exactly what you want. This thing is moving. The dead money time, like if you look at from September 25th, essentially until October 24th, where 2 closes above ended the move and then reverted back to mean, the middle of the band. You haven't had a setup like this since July. Okay, so on watch for a big move out of Riot. Not saying you're going to get another one like that, but just watch the yellow line and see how long it holds. That's it. We'll take a look at SMH real quick. As you can see, has been a leader all year, hit a new all-time high, pulled back to the bottom of the band, and now back at the 20. Pullbacks into the gaps are for buying. If you look at the bands, again, inside the bands, no breakout here. This is range bound. Okay. Look at NVIDIA, the leader within, range bound. See the bands going sideways, the bands are contracting. You don't really have a big move here. This thing did the move and hasn't gone anywhere since May. Okay, you could say this is a big bull flag, getting ready to do something like that. Totally, totally possible. Okay, do not sleep on NVIDIA, do not sleep on QQQ. And yeah, I mean, that's pretty much it. That's enough. There's plenty of names to look at to make money. Let's take a look at some of the quant analysis here. So insider transaction ratio, obviously the lower the better, the higher the worse. 2000.com crash, like this number was like 4 times buying, right? Selling was 4 times as much buying. That's not what you want to see. Here we've got a much lower number, so much more bullish. Put that in the bull thesis. CTA's now short 25 billion. U.S. equities, the largest short position in 8 years. Okay, definitely bullish. There's some quant stuff here. 2023 will be its 9th year since 1928, since the S&P fell in each August, September, and October. 1990 and 2016 were the last 2 times it happened, and they both saw a gain in November. Okay, cyclical advances since 1990 have almost always generated 52-week highs exceeding 10% and 7% of issues listed on New York, respectively. The exhaustive post-1998 advance was the lone exception, right? So that happened here in October of last year, and we just don't have the breadth, right? So if this was a cyclical bottom, based on the data that we had last October, suggests that, why don't we have the breadth and rotation to elevate these 2 readings to 10 and 7.5, which is what has happened every other time you had a quote-unquote new bull market, okay? So this, again, we don't have data suggesting new bull market or confirming new bull market because we don't have this breadth expanding. And again, that's why we look at IYT and IWM to see, are they rotating out of these mega cap names into smaller and medium-sized cap companies. And if you see that, that's healthy. So the summation index, you definitely want to buy when you're down here. Okay, we're down here. Now, is it the low when you get down here? It might not be. You might have to wait a little bit. But you're certainly a lot closer. NIM exposure, okay, hit pretty much it hit the lowest level since last October, where we have found a bottom. Okay, and that was a week or 2 ago. Small caps are as cheap as the COVID crash. Again, if we're going to see a rotation into IWM, you want to see it happen when it's cheap. Okay, NVIDIA is not cheap. Small caps, very cheap. Haven't moved in 6 years. So at this point, I mean, I think we have enough information to suggest that it's possible we're seeing a bottom, or we're in the process of a bottom where new lows are still coming. It's too hard to tell at this point. So all you can do is use this past week's lows, right? This point, this line in the sand, to trade against. Dips that fall back into these gaps are for buying. And if the bulls are serious, look for a V-shaped recovery, a shallow pullback, and then a move much higher to where you're going to be forced to buy much higher again, like right back here, where you pretty much had a period between June and July where if you wanted to buy, you needed to just market buy. You never got the pullback to the 20, and by the time it pulls back to the 20, the move's over. So in this instance here, where we're below it, coming back and recapture, I would expect something like this, right? This period back here to start to take place. So, a flag to form. And the question is, where does that thing start? Probably right up here where you have this gap. Then you get that flag, and now this will become the trading range that you trade against. And this will be the move that you're looking to capture. Whether it starts from there or here is irrelevant, right? I'll move back up here to where we were. Again, using the 50% as a guideline, right? Looking for something to happen up there. So that's how I like to look at market symmetry. That's how I like to use geometry, the bull flag patterns, and breakouts. This is how I like to look at Dow theory, whether or not transports are leading, whether or not we're seeing breadth improve. These are the quantitative studies I like to look at to see, are insiders buying? Are they selling? Is NIM exposure high or low? What's the position of the CTAs, right? These are the things that I like to look at to help provide a more weight of the evidence approach to managing your portfolio. And as long as you couple risk management with that, you tend to work out just fine, i.e. position sizing and how much correlation you have with either equities or defensive assets. That's all I've got. If you liked the video, hit the like button, subscribe to the channel, and I'll see you in a couple weeks.